The U.S. economy contracted for the first time in 3 years in the first quarter, deepening concerns over the impact of President Donald Trump's tariffs. The negative GDP figure out Wednesday reflected a flood of imports as businesses raced to avoid higher costs from U.S. tariffs, underscoring the disruptive nature of Trump's often chaotic trade policy. The Republican president deflected blame for the unexpected contraction and said in a Truth Social post that Americans should be patient and that his tariffs would eventually lead to an economic boom. The Commerce Department said U.S. gross domestic product, the value of all goods and services, decreased at an annualized rate of 0.3%. That fell short of the 0.3% increase forecast by economists polled by Reuters. The reading came a day after a separate Commerce Department report showed the goods trade deficit surged to an all-time high in March. Imports jumped at a more than 40% rate, the largest rise since the third quarter of 2020 when the nation was in the throes of the pandemic. That obliterated a modest rise in exports, resulting in a large trade gap that chopped off a record 4.8 percentage points from GDP. Wednesday's report also reinforced Americans' growing disapproval of Trump's handling of the economy as he marks 100 days in office, with consumers' inflation expectations rising. Consumer confidence is near 5-year lows and business sentiment has tanked, while many companies have pulled their 2025 financial forecasts, citing uncertainty over the economic environment. Wall Street's main indexes opened substantially lower after the GDP report's release, but stocks recovered some ground by midday.